It's another week here with the Everyday Growth Advisors Mentorship and Livestream. I hope you guys are having a great morning. Welcome back, guys. Good morning, good morning. How are you? Did everybody have a great weekend? I hope you did. It's been a pretty good weekend for me, I guess. I got to relax a little bit for a day and then back to work on Sunday, prepping for the weekly webinar. Lots of other exciting developments that were occurring. We held a webinar today. If you were curious to know what the webinar is about, just a quick little thing that I did for you guys. People who missed the webinar or people who are not part of the Discord community, I decided that I would make the webinar available for you guys. So you now have access to the webinar. Please go have a look at it. It's this one right here, Recovery on Meltdown, Sunday prep. We went through it in the morning today. Highly recommend you watch it. It was a Zoom call. I recorded it for your viewing purpose, for your benefit, so that you could actually, view it and, do it at your own time. So that's one thing that I will continue to do. So I'll try to put out these weekly webinars for you guys, so that even if you're not part of the Discord community, you still gain value from attending these webinars. Okay. I think the webinars are a good extension of what we're about to do for the week. But then obviously, if you wanted to know exactly the ins and outs of what exactly we're doing, then you could join the community. All right. We have over 70 members now. I'm very proud of that. For the first month, we have actually achieved a very, very nice growth. And, I hope that this growth continues as the year goes forward. So I'm very excited to have all of y'all with us in this community going forward. Good morning. What's up? Hi, Melissa. What's up, Shoei? Alec, Eric. What's up? Susie. Peter. What's up, man? Nelson. M. And sure. Good morning. How are you guys doing? Make sure you guys smash the like button. Also, if you can, go and click like and subscribe on this video and the previous one. If you could go there and just drop a quick comment, that would mean the world to me. Honestly, if you guys comment on these videos, after the fact, it really helps me out a lot. And, the likes, those help me tremendously. So by you clicking on the like, that really helps me in a way that you really can't understand. It helps the YouTube algorithm, understand that this video needs to reach other people. So I really appreciate you hitting the like button. That's the least that you can help me out with when you come to these live streams. If you don't want to donate, if you don't want to do anything else, I really do appreciate it. Thank you. Just a quick little announcement. If you have yet to sign up for the beginner's course, which is going to run in it's going to run in 12 hours from now, 12 hours and 30 minutes. Make sure that you head over to learncompoundgrow.com, click on the enroll button and enroll yourself into this 5-day course, which is going to teach you about equity markets, the structure of them, probability and statistics, creating your trading system, learning my trading system and putting it together with yours. Of course, analyzing, planning, and executing trades, so different types of trades, and proper risk management through position sizing and capital preservation. Okay, classes start in about 12 and a half hours. And this will be the last mentorship course that will be held for a while. All right. We are coming up with a new system that we will be using. And I think it's going to be a much more better system that will allow you to get them. Okay. I missed a discount on option swing. Chris, I'm not a part of option swing anymore. I'm not sure if you heard it, but Everyday Growth Advisors is now its own entity, and we do things on our own. Okay. So we do have our own Discord, which you can be a part of, which is very different from what other communities are doing. Our community is more focused on live trading sessions where you can get to see the inner workings of how we get in and out of each single trade every single day. You get to look at my portfolio live every single day. It's a huge difference. Here are some testimonials that came in over the weekend. 2 of them that were outstanding. J Keys, the first month of EGA was amazing. Everyone in the community is so hungry to learn. T and the team do an amazing job getting the snipers prepared and give you the catalyst behind the picks. The live streams have really helped me out personally in trusting my setups and being patient. I love that EGA teaches you to find quality setups and what we're looking for in the contracts we choose rather than just calling them out. Thanks for all the hard work you put in, and I'm excited to see this community learn, compound, and grow. That was really nice of him to say that. The first month of EGA has been filled with knowledge and learning, from live trading sessions to the weekly night webinars. The whole Discord have been very supportive and welcoming. T has always made sure we understand what happens during trading hours and even take time to explain concepts, which is priceless. So those are two things some people were talking about over the weekend, and I truly did appreciate those testimonials. What is the link? Let me get it for you. In order to join the Discord community, this is the link. Go have a look at it. Cool. All right, awesome. Once again, last chance to sign up for the beginner's course if you haven't. Okay. After this one, we won't be holding one until, I want to say, March. So this will be the last week that we have wave number 15, and then we'll be taking a break for a while in putting a new system, and then that will be absolutely great. Darren, awesome. Glad you signed up. Yep, we have quite a few signups, so we will be doing wave number 15 this week. I know that a lot of people can't attend in real time. Remember that if you can't attend in real time, we will be sending you the recordings, and you will be able to catch up with me, and you will be able to send me an email to, get everything kind of in order, okay, if you have any doubts or anything like that. You won't regret it. Thank you, Kyle, for saying that. Sign up and ready. Awesome, Darren. I just subscribed for another month, and we'll be doing the yearly once I get some bills paid. Thank you for saying that, man. I really, I appreciate the fact that you guys find it valuable, and I think that the value is absolute. There is no denying it. I think for what you receive in terms of value, I think it's certain. And I don't believe in giving discounts, because I know that if the value of something is worth a certain way, I know that I'm giving you guys enough value for you guys to see that. And so I will. My only promise to you is we'll never stop working hard for you. And by you locking in this price, it basically makes sure that in the future, when the prices do go up after memberships counts go up, we will be, you'll be able to enjoy that rate as we add on more value to the Discord. And believe me, we will be adding much more value to the Discord. You guys don't even have an idea of what is coming. Believe me, you don't have an idea what is going to change with EGA in the end of 2021. So it'll be insane. Where do we sign up? I tried to, there wasn't a date on it the last time. Here you go. So are you talking about the course, the mentorship course? If you're talking about a mentorship course, all you got to do is go to learncompoundgrow.com/courses, go to the beginner curriculum, click enroll now, and then it brings you to the course page. Click enroll now once again, and it'll allow you to enroll now. That's where you find it. Okay. Cool. Hope that helps you. Do you got, Joseph? Let me know if that was what you were looking for, or if you're looking at the Discord, then the Discord page is also there on learncompoundgrow.com. Make sure you click on the Discord community, and then you'll be able to sign up from there as well. So both ways, you can have access to it. Right here, EGA Discord. You can choose monthly or yearly and sign up for it. Okay, the ticker of the week is Nike this week. We hope that, we kind of played the bounce nicely last week. On the bottom right here, I want to say somewhere here. Where was it, team? It must have been here, right? Somewhere here, right? I think it was somewhere here. I'm asking the team who is on the Discord community. It was somewhere here. We started taking SPY puts. Sorry, what am I saying? SPY calls. Okay, last Friday, to play this bounce up. And obviously we took some SPY calls because we knew this sell-off was overextended. Therefore, playing this to the upside. And we'll see how this goes today. We're not inclined to overtrade today. It's going to be a rocky day. We'll see if we can hold above this level. This will be a key level to hold for SPY. I think a movement up to the 61.8 is also very probable. And that would signal a higher high here to kind of bull trap certain investors before flushing another down. Okay. Do you have a Zoom live trading today? Unfortunately not. The Zoom live trading sessions happen as part of our Discord. The Discord community has live trading sessions every single day. I do it with them every single day. So you get to see the play-by-play every single day. In fact, on Friday, for those of you who were part of Friday's live trading session, man, oh man, we almost made a crazy play on Tesla, and then I got stopped out, which would have paid out about $3,000. No, yeah. It was 1,000% play. It was I don't know if you guys remember this. We took a Tesla put for $8.15, and I got stopped out for $18 profit. But then if you would have held on, you would have made $3,000 from this trade on Friday. That was something that happened on Friday, which I was kind of bummed out about, but it is what it is. It is what it is. Okay, we have a lot of things to cover this live stream, guys. I'm going to get straight to it, all right? So let's get started. Cool. Okay, let's have a look at the news first. Myanmar's army chief, bets big on China. Okay, whatever. Don't really care this much. Blah, 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 blah. Global stocks rally. Silver jumps to 2013 highs. Okay, Wall Street bets are pumping silver now because they believe something about JP Morgan investing in it, blah, 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 something. I'm not really worried about it. I don't really care about it. Trying to pump the silver market is the most dumbest thing in my opinion. Citadel, silver bet exposes rifts in Wall Street bet army. Okay. JP Morgan strategist says Red Army won't spur big market drop. No, it won't happen. India, You must remember, retail traders make out a pretty small percentage of the market, guys. So, I think people are over analyzing the situation. AMC leads gains, Reddit darlings focus, shift to fifth silver. Okay, Nintendo smashes expectations with best quarter since 2008. That we should have seen that coming. Elon Musk says he's wired up a monkey's brain to play video games. What? Jeez. Oh my goodness. Yay. Millennials are changing the luxury real estate market. Woo. That looks nice. I want a house like that. Can we have EGA headquarters to look like this, guys, please? Yeah, I'm down. We're gonna get a house like this in the future and then convert it like this, exactly like this one. Hell yeah. Let's do it. That will be where EGA headquarters will be. Online traders push up silver. Yes, for the wine cellar. Yes, absolutely. Robinhood needed $3 billion to shore up volatile trading. They only got one. So, GameStop day traders are moving into SPACs. Ooh, okay. Maybe CCIV today, guys. I'm thinking of getting CCIV. We'll see. Exxon and Chevron merger discussed. Is this up pre-market? We actually have this on the list today. Little bit. Not too bad. A little bit. I don't think this is possible, though. I mean, it might be, but it's going to be crazy if it happens. A merger between Exxon and Chevron, the two biggest petrochemical company businesses in the world. Once again, guys, if you're here and you enjoy this live stream Monday, Wednesday, Friday, I really hope that you can help me smash the like button. You smashing the like button is as important to me as me taking a breath of fresh air when I wake up in the morning. Seriously, guys, it's really essential for me. If you can take a 1 minute out of your day to just hit the thumbs up or the like button, that helps me out tremendously. You do not understand how much it helps me out. So I really do appreciate it when you do that. Thank you. Myanmar's coup, posing tests, okay, COVID-19, Facebook knows, okay, cool. Not much there. News is pretty, I want to say news is pretty neutral, not bearish, not bullish. Pre-market movers, AMC back 20% up to $16. What else? Naked Brand up 7%. Nokia up 8%. Okay. Guys, remember that this week you have quite a few things that are going to be coming up. I just actually put up the weekly playbook here on the Discord community, just to kind of show you. Every week we put out a report here, and so this is today's front page. The quote of the week is, in a society governed passively by free markets and free elections, organized greed always defeats disorganized democracy. And right now, we see this happening. So remember, everyone might think that, we've won. But I'm telling you, disorganized democracy will always lose to organized greed. And you know that hedge funds are collectively greedy. So last week's market action, we're surrounding markets starting to price in another muted Q4 earnings season from smaller businesses. Wall Street and Main Street having an epic showdown to prove who has more power and rights. Big tech continue to outperform the market as FANG stocks make record-breaking profit. And consumer spending cools with new stimulus support, which would allow for further cushion on economic expansion. Here's a little comic that I threw in there, from Darren Bill, which is nice. This report contains all important information. For example, key market rotations, developments, and all the key catalysts and news that you need to know for the week. Everything put in a one nice place for you to go and have a look at. And our snipe list is also up for the week here. So, that's something that you get access to when you sign up for the Discord community and you're part of it. Not to mention that after this, we will be having a live trading session together, as we do, like a family that sits on a dinner table to eat, right? Right, EJ Tribe? We have our meals together, don't we? And we help each other. That's exactly what we do. Nectar Therapeutics space is up 8%. Wow. Kathy Denver, I think, made an investment, right? In that, maybe? Sorry, not Kathy Denver. Kathy Woods, Kathy whatever, ARK Fund thingy lady. IFF. I can't believe I got her name wrong. Apple, okay. Not many big movers on this side for this pre-market screener. Let's have a look at what the heat map looks like on the S&P 500. Make sure you guys smash the like button, guys. It's Monday, and on a Monday, the best thing that you can do is smash the like button. If you smash the like button, you will get an immense amount of good vibes and positivity sent from me to you directly right now. Feel it, feel it. It's all coming to you. Thank you, guys. I really do appreciate it when you do smash the like button. It helps me out a lot. You don't understand. We need to get to like 90 likes or something today. Can we get to a 90 likes, guys? Honestly, can we? Please, please, please. The likes really do help me. All right. Tesla up 3%. Sheesh, we should have bought some calls. Jared, you bought calls, huh? I remember you did. Or something like that. Banks, okay. Big tech kind of leading the way here. Consumer defense kind of muted a little bit. Industrials also a little muted. Healthcare kind of muted. Restaurants, consumer cyclicals, okay. Huh. So far, so good. Not anything crazy. We'll see how we do over here. I think, this might be a rejection zone. But if we can consolidate above and make a couple of waves up, this would be nice. We'll see how the market reacts when the market opens. That will be important to see. If we do get up to the 61.8 retracement, I'm going to take puts again. That's mainly what I'm going to do. I'm going to be hedging. And then I'll take some calls on the way up as well. So I'll be hedging properly. Okay. Insiders, let's have a look. Any insiders selling stuff on Friday? Did we see any of them? CVNA, Carvana. So a little bit, not really a lot. Tesla, what is this guy? SVP Powertrain Energy, not really a lot. What's this guy? No. What's this one? Dell, CEO and Vice Chairman, sold 34% of his shares. Okay. And ISRG, Intuitive Surgical, okay. Goldman Sachs Treasurer sold some, not really that much neither. Okay, cool. Not really that interesting. Okay. Not really that many insiders selling. And we have the ticker of the week. We'll go through this in a second. In the meantime, let me give you guys a overarching macro trend update. So we held a webinar today. If you didn't attend the webinar, there were a couple of important things that you need to keep track of. The first thing is that, the treasury rates are starting to spike again. Okay. 1.87, back from 1.81 on the previous day. On Friday, we had a big spike in treasury again, treasury yields, so people crowding out again, once again. And we continue to see these rise, right? Interest rates, the real rate on bonds are continuing to dip. And the nominal rates and the inflation rates are starting to rise. So we are approaching the bonds in the bonds market. We're approaching the levels at which the Fed has started to taper. We are already at 2% for your information for the expected inflation target We're approaching 2% right now. Okay, the Fed said 2.25 or more than 2.25 also. So this is the area where we should be cautious. Okay, before this, it was like everybody was like, yeah, let's go, let's buy everything. Yeah, let's buy. Okay, and when that happened, we had no issues, right? The market was pretty bullish, and we never had any problems with that kind of stuff. But as this goes on and goes on, this would be something that will continue to be a situation where markets will pretty much push higher and higher and higher, right? Will push higher and higher and higher. And when they push higher and higher and higher, that's when you'll see, that the Fed will issue a taper guidance. Now, I'm not saying this is going to happen right now, but sometime in the future, they will have to taper off interest rates. Okay, and I just spoke about this on a webinar. If you haven't watched the webinar, okay, you have to watch this specific webinar, because this sets up the precedent for the entire month. Okay, this one sets up the precedent for the entire month. You have to watch this video. Okay, this video is super important if you want to know what my thought analogy is going to be for the next coming month and maybe even the next 2 to 3 months. Okay, because I go through the overarching market trend, okay, for what I'm seeing. All right, so definitely watch this video. It's super important. I cannot stress it enough. All right, and if you do like it, please go ahead, click on the like button and drop a comment. I really do appreciate it if you can. Seriously, leave a comment here. I really do appreciate it if you can. Click the like button, leave a comment, and even on this stream right now, these, you don't understand, guys, the likes really do help me. YouTube doesn't recommend the videos to other people unless you like it. So if you're here and you're listening to this live stream right now, the least that you can help me out with is to hit the thumbs up, the like button, okay, because that really truly helps me out, and you don't understand how much it does. It's very, very important to me. So thank you very much for helping me out with that. Okay, now overarching trend with this. Then also we went through a couple of important things. The other thing that we went through was, firstly, once you know what is the cost of doing business with interest rates, for example, right? First of all, what are these interest rates? As I was mentioning in the webinar, very briefly, I'm going to recap. These interest rates are the federal funds rate, okay? Not these interest rates. This is not the interest rate. This is the bond rates. These are returns on bonds. But what I was talking about in the webinar was the federal funds rate, which is the rate at which banks borrow from each other, okay? That's how the cost of money is calculated on a daily basis, all right? The federal funds rate calculates the Fed targets how much the federal funds rate should be by telling banks how much they should charge each other for borrowing money from each other. That is what drives the pricing of purchasing power, okay? And so once you have the pricing of purchasing power, then you should look at the actual purchasing power of personal income. And so that's another thing we were looking at, right? This is what we're looking at, the personal income and outlays for December 2020. This was posted on January 29 here, you can see, right, by the BEA. Okay, this is official government, a government website, the Bureau of Economic Analysis, all right? And so they reported that personal income has increased 116 billion, right? This is good. Personal income is increased 0.6%. Okay, that's good, right? That means more people have made more money this time around, right, in terms of per capita. And then disposable personal income is also up 0.6%, which is great, right? But then look at this part. Personal consumption expenditures are down 0.2%. So people are making more money, but they're willing to spend less of it, which causes a natural contraction, right? Causes a natural contraction. And you can understand why, right? People are uncertain about the future. How many of you are worrying about your next paycheck or worrying about, what's going to come next, right? These are all real worries in the world right now, right? With COVID around, you don't know how long it's going to take for you to get a vaccine. You don't know when the new normal will be around. You don't for how long the new normal will be around. How long you're going to be stuck at home, how long you can do this and do that. And so people are saving a lot of money, okay? They don't want to spend, thousands of dollars on things that they don't need, right? So Personal income here is down. This is another thing that you need to take note of, right? So you have three pillars of the market, right? You have the cost of doing business through interest rates. You have personal expenditure. So I like to call this consumption. And then the third thing is the results of these two, which is GDP, right? GDP. The interest rate minus the personal consumption gives you the GDP, okay? And that's how you can derive where the state of the economy is, right? If you are just looking at charts the whole day, and I'm not going to say this again. If you're just looking at charts the whole day and you look at these trend lines and you think that that's what's going to make you money, I'm sorry. I'm giving you a rude awakening. It's not going to happen, okay? Remember, sometimes it's about understanding where the market is. You need to understand, what are you even looking at? What is the information you're looking at, right? Super important. And so if you find these kinds of things important, smash the like button. If you think that this was helpful for you to understanding, smash the like button. I really just need you guys to smash the like button today because it's super important, okay? So the next thing that you look at after you look at these two things is, what are you going to look at next? You're going to look at the GDP, right? Let me bring the GDP over. There you go. So you look at the personal expenses. Once again, recap here. Income is up. Disposable income is up. Expenses are down. What does this mean? And you need to remember, one person's spending is another man's income. If another man's income is another person's spending, then the economy naturally contracts. You remember, you have a multiplier effect, okay? So the more the economy contracts, the more the fiscal policy has to step in to stimulate the economy, okay? And that's what the Fed's duty is, to report those numbers back to Congress, and Congress should put together a fiscal package to stimulate the economy, okay? All right. Now look at GDP here. Once again, put on January 28 here, the end of this, just past few days, right? Gross domestic product here increased at the annual rate of 4%. This was actually much smaller than expected. So GDP actually contracted a lot from the previous quarter. And this was actually a very important thing because the previous quarter GDP was super high, right? We had, remember the COVID crisis in Q2 that created a big contraction, and we went into a temporary recessionary period here between Q1 and Q2, right? But it wasn't actually a true recession because recession is actually considered 4 quarters of GDP contraction. This was more of like a short-term kind of economic downturn, right? It was a theoretical recession, right? But anyhow, understanding this is important. GDP did contract, and it was a result of personal consumption being lesser and people just willing to spend less on the economy, right? Not only that, remember GDP is also made up of net imports, right? So what America buys from other people and what America sells to other people also goes into GDP, right? And I'm talking about other nations, okay? So the net GDP of America was down 4% this last quarter, which means that another thing is that means the economy is contracting, people are spending less. What can you derive from all this information? What does all of this have to do with stocks? That's the question here. Well, it's pretty simple, right? If you're expecting a dip in GDP, you're expecting personal consumption to be lesser, then you can definitely guarantee that the stock market will see a slight contraction, right? Especially after rising so hard. And by the way, guys, we saw this coming weeks ago, FYI. We've been talking about this ever since this happened with my team, okay? I'm not bullshitting you. Ask them. They're in the chat. They will tell you exactly what I'm talking about. Over here is when we already noticed that GDP was contracting, and we already noticed that ER season was not going to be as good as it was supposed to be. We literally called this out up here because we were already looking at the statistics way in advance. I've told you guys this so many times. It's not enough for you to look at the market when it's going down and start to short it. You have to be up here already thinking of what your war chest is going to be like, thinking about what you're going to do if something happens, right? That is very important. And so that's exactly what we started to do, okay? And now when we see this happening, we already entered calls to play the bounds, okay? This happened last week already. So you have to find the right team, find the right people that align with your goals, your long-term goals. If you're one of those people that love every day getting handouts and chasing waves and buying at the tops and, doing YOLO plays and, I don't know, just taking all those kinds of risky plays, you know what? By all means, go for that. But we are not that community. We take things in a very, very risk-driven approach. We calculate our distance. We calculate everything specifically and allocate risk based on what the macro trend is. All right, and that's just worked for us. So once again, smash the like button if you're here, you're enjoying this live stream, and you want to be a part of the DJI tribe. Smashing the like button is the only thing that you can help me out with when you're here. Okay, now from a technical perspective, let's have a look at SPY and QQQ and the Dow Jones Industrial Average. I always do the technical breakdown, so let's do that. So you can see on the 4-hour chart here that this is not the first time this is happening. This is now going to be the third time this is happening. The last time we had a move from here to here, and then followed by another move from here to here, and then a quick buy up, a quick buy up, a quick buy up, right? And then this wave went up pretty far. So expect another move to possibly the 200 moving average, right? 360 should be a fair level if we retrace, but I don't think that we will get there like right away. I think it's going to take a couple of weeks, right? And I think in the meantime, the market's going to start to move sideways. I think we're going to be in a sideways channel for a while. We may just end up moving sideways here, but what is for sure is that the month of February, we're going to see increased volatility. And so movements back and forth will be very, very common. The reason why there will be volatility is because there will be a fair amount of people betting on a recovery and a fair amount of people betting on a drop. And this will cause people to buy out the money options on both sides. Okay? And what does that mean? That means a spike of the VIX, which has already happened, and people have already realized it, and they've already got in. Okay? And the VIX is already up at 30. Okay? And it could continue to go higher if it wanted to. Okay? But remember that that is what we're looking at. All right, so the S&P 500, that's exactly what we're seeing there, and you can see on the 15-minute chart here, we're continuing into this downtrend more than likely. Okay, so follow the trend. Don't try to short the market, or don't try to long the market exuberantly. Follow the trend, and the trend is your friend. Okay, we are up at 373 pre-market. About 1%. We'll have to see how the market opens today. All right. With QQQ, it's about the same thing, except for a bit more exaggerated. Right. QQQ is up here. Right. We got a retracement target with QQQ already. We hit that one. So I'm gonna actually go ahead and get rid of this. We hit our retracement target with QQQ. You can see we had a target right here. We hit that already. I'll get rid of this. This was our retracement target. We hit it just last week. And now we'll plot some additional zones here and see, where we see this going. Actually, we need this one. So this is going to be a key level of demand here for QQQ. Okay. And we'll see how this pans out. Absolutely a short buy up here makes absolute sense before we resume the downtrend. So my advice to you is the moment that we get up back to the 322 324s, which by the way you can play to the upside if you were a day trader. If you're a swing trader and anything else like me, then definitely expect probably consolidation or another wave down when we come back from there. So anyhow, it doesn't hurt to take another hedge when you get up to this level here at the 324, 326 right here. Okay. I would, and I'm going to do it. So that's going to be kind of our game plan as we move into this next few coming weeks. Okay. We have 96 viewers and 69 likes. If that's not a sign that you should like the like button, you should smash the like button, then I don't know what is. Seriously, guys, 96 viewers and 69 likes. That is just the inverse of the number, and you need to hit the like button. That's all. That's what that means. Okay, so that's that. DIA, which is the Dow Jones Industrial Average. Similar positioning. Nicer demand zone. This is a very big demand zone for Dow Jones. Recovery back up to the 308 level or the 306 level here should be a probable level at which we can short back down. We'll see if we get it. I'm off the view that we will go up to touch the 200 moving average, which will be somewhere around here in the time to come. That leaves us at the 306 level or so. Okay. The same thing goes with the QQQ and the SPY. You know, that we are gonna eventually buy up to this level here, where we will face a resistance and then come back down again. That's usually how things go, okay, in this market. All right, excellent. Smash or get smashed today in your trading. Okay, excellent. And once again, reminder, if you want to be a part of our Everyday Growth Advisors mentorship course, today is the last day to sign up. We're not going to be holding another course till 1 to 2 months from now because we're making some systemic changes with the way that we do things. So I hope that we will see you in class. Go to the website to get signed up, learncompoundgrow.com. I'll also put the link in the chat, so make sure you go have a look at it. All you have to do is click on the courses section here, click on beginner curriculum here, right here, enroll now. Click on enroll, and you can get into the course, which will be starting in about 12 hours from now. Okay. Okay, excellent. Let's see what the chat is up to. After that, we're going to do the breakdown of Nike as a company, and then we will be ready for our live trading session with the team on the Discord. Who over here enjoyed the live trading session on Friday and want more of it? Which, you know, I know that there were quite a few of you who attended the free live trading session that I put out as a Zoom link on Friday. And I want to know from you guys in the chat, people who attended it, how did you feel about it while I drink my sip of water? You know, tell me how you felt about the live stream session and what was great about it. Oh boy. Is the stream lagging? I don't know if it is. Can somebody confirm if the stream is lagging or? It was chill and better than all the YouTube live sessions. Okay. It was great to see what you guys look for. Flames. Okay, cool. Thank you for your feedback. I appreciate that. Anything else? That's it? Only 2 people? I'm sure there were more of you there. Excuse me. Wasn't there in the first one though. I would be interested in watching live trading. Wasn't there for the first one? Okay. Yeah, don't worry. We will you know, we'll try to schedule a few more extra ones in the future. Chat lagging for me. Yeah, that's what I was thinking. Was amazing. Market was slow on Friday. Would love to see you guys when there's more action. Yeah, when there's more action, the entire team, we really seriously eat together. So it's a nice little feeling. It was pretty awesome. Great to see how you guys watch the names, think about trading. Absolutely. Yep, definitely feel that. You know, the other thing is that this Discord community is really like no other, in my opinion. We have a bunch of traders who are extremely talented. And so when we come together as a team, it's almost like a lion pack, you know. We really, you know, help each other out. There's no bad vibes. You know, we post our confessions, we post our trade recaps, profits and losses, you know, we help each other out. This is really truly a family. And, you know, I really like everybody who has entered the community because it's a very good representation of what EGA should be. Live trading always awesome. Market was slow on Friday, but T took a disciplined approach and we still found some good plays and ended the day green. Hell yeah, absolutely. Awesome. Okay, let's do Nike real quick. Now that I have some feedback from you guys. Thank you for that, by the way. I appreciate you guys. So with Nike here, let's have a look. So first of all, Nike's investor relations page is pretty awesome. Nike is a business that I think needs no introduction. They are, you know, they sell apparel, athletic footwear, they sell sports equipment. That's mainly the 3 segments that they operate from, as you can see right here. Footwear. footwear, apparel, and equipment. Okay, footwear generates about $23 billion, 10 billion, 11 billion roughly from apparel, and about 1.2 billion from equipment. Okay, they have a extremely, immensely great branding. This company's branding is their main asset. Okay, they have a strong brand. The economic moat for this business is their brand. The brand of this business is something that they have built over the years through relentless positioning in the market. And when other businesses failed to innovate, Nike took the opportunity before the COVID crisis to innovate and digitize their business. And after doing my analysis, I'm proud to say that this business is set to benefit from these tailwinds in the considerable future. Okay, Nike is a profoundly beautiful business that continues to outperform even during times of uncertainty. And after their strategic team has realized that revenues abroad are tappable in an efficient manner, they have grown immensely. What are some of the primary markets that Nike has tapped into successfully? China, EMEA, and APLA. All right, this is your East Africa's and also Asia Pacific. Okay, China is one of the biggest markets for Nike right now, and through the digitization of their business, they have been able to penetrate that market and increase sales, digital sales, by 84%. Okay, or 80% on a currency neutral basis, taking into account FX rates. Their second quarter results for 2021 saw quarterly revenues were up 9% to $11.2 billion compared to prior year of 7%. So on a year-over-year basis, they are doing a little better, right? And Greater China reported revenue growth of 24%. Okay, important. I keep talking about China. I keep talking about it, and you guys need to realize that China has a rising middle class that is just getting started. They are just getting started. It's like a country has just woken up from a deep slumber after being in years of poverty, and amounts of wealth has poured into the nation after years. These industrial revolutions, everything that China had been doing in the past, is now setting China up for a big first world rally. Okay, a first world rally. As the middle class grows and as things become better in China, things are going to start off. Their stock market is a baby. It's an infant, literally, compared to the US market. Okay, you have to realize this. So, inventories declined 2%, which is good, and have returned to healthy levels globally. That's good. This is their CEO and president saying Nike's strong results during a dynamic environment show the power of staying on the offense. I love hearing that from a leader, right? Staying on the offense. Fueled by compelling innovative product and global brand momentum, we continue to extend our leadership. Our strategy is working, and we are excited for what is ahead. Our second quarter revenue performance was impacted by strong Nike brand digital growth of 84%, offset by lower revenue in the wholesale business and Nike-owned stores. During the quarter, we experienced temporary door closures in geographies affected by COVID-19. However, more than 90% of our stores are open today, with some operating on reduced hours. We continue to experience year-over-year declines in physical retail traffic, but partially offset by higher conversion rates. So they're growing their digital business, and this is something that Nike has done successfully. Now, if you realize, prior to this, Nike used to sell to companies like Foot Locker and what is that other ones? What are the ones that give you those shoe companies? There are quite a few of them in the US. Foot Locker is one of them, and you have DC Shoe Warehouse or something like that, right? There's a whole bunch of them, okay? All the discounted prices used to go there. Now Nike has taken on its own to do distribution to retail on their own. And this is what has caused this huge, immense spike in revenues, or rather the digitization of their business, okay? Something that is very, very important. They took it on themselves to distribute, and now it's paying off handsomely, right? Remember that digitization for any business is usually a one-time expense, right? You set it up one time and then your business eats forever, right? That's the reason why you got to set a digital business up. Your business has to be electrified. And that's what all businesses are doing, right? Revenues for Nike brand were 10.7 billion, 8% increase, as well as growth in the sportswear and the Jordan brand, slightly offset by mid-single declines in the wholesale business. Revenues for Converse were 476 million, down 4%. Gross margins decreased by 90 basis points, which is about, let's say 1%, right, less than 1%, 0.9% basically. Partially offset by full price product margins. Selling and administrative expenses were down 2%, which is good. And net income was up 12%, which is awesome. Okay. I'll go through the rest of this stuff on Wednesday, and we will have a look at those specific things about the intrinsic value of Nike. This business is awesome. If you look at the revenues, they have been growing revenues consistently through the years, except with the exception of just these past 2 quarters, or these 3 quarters during COVID crisis. But now they are back to all-time high in terms of quarterly revenue. You can see this, right? Even though the trailing 12 months looks weak, but their quarterlies are back to where they were. So this little dip here on the on the long-term uptrend here, this dip presents a very bullish opportunity to buy Nike at a discount, okay? A discount. I like this business. We need to see if, of course, if it is a good business to buy for the long term, okay? This has been in a huge uptrend. It could come down further. The market could price in further correction here, but for right now, it wouldn't help to nibble some small positions. However, do not take it today. We don't know how much this stock is valued. I will tell you the valuation on Wednesday when I do my full analysis, okay? If you look on the, I think it was a 4-hour chart. No, daily chart. We had a nice little bounce, okay, on the demand zone here. I think it was a 4-hour chart. Yeah. Nice little bounce on the demand zone here. On the 200 EMA. This, now we're diving into technicals here. You know, a bounce on the 200 EMA and then a bullish engulfing candle that came out right after that. You know, may see Nike run up in the short term and then maybe come back down for another wave down, following the broader market trend. This is why it is so important to do a top-down analysis, because right now is when majority of people would go and take full risk on and buy this business to the upside. And yeah, you would be right temporarily, but then if you don't hedge against your position, you're more than likely going to suffer losses. So you have to be able to tell what's going on both sides, okay? So from a technical perspective, we see that the retracement target is somewhere around the 139 zone for the upside here. We're already at 134 pre-market here, so we're up about $1.30, and we'll see if we want to play this to the upside sometime this week, okay? Me and my team will probably come up with a couple of strategies on that, okay? And then we'll also go through the financial health of the company on Wednesday. This is really a great business to own at the moment in terms of what I'm looking at so far, preliminary-wise, all right? And that kind of concludes it for Nike right now and right here, okay? If you have any comments and stuff like that, please drop in the chat box so I know what you guys are thinking about. Also, if you like the analysis, make sure you smash the like button, guys. 78 likes. Can we get 20 more likes? Can everybody take a second out of their day to hit the like button? Please do it for me, please. I'm just kidding. Okay, awesome. Let's see. Some people were talking some things in the chat. I have a couple minutes more, about 5 minutes till the live stream ends. So if you need a ticker breakdown, let me know. I think there were a couple here. Let me see. Uber 72 call. Bro, your call is so out the money. It's ridiculous. Nah, I wouldn't do it. March, nah, man. Don't do that, man. You're gonna drain yourself. Yeah, I know what you're trying to do. Pick an out the money contract because you can't afford it, but don't do that. 72 is like way up here. You don't even know what the heck is going on with this business. Once again, guys, you know, when I first started DJI live streams, I took it upon myself to help you guys and educate you guys on these contracts that you guys pick. And I realized that sometimes, you know, you guys are always very tempted to take these out the money contracts and for like a medium term expiry, like for example this one, 19 March, and then you say 72 calls. Do you when you're thinking about these kinds of moves, do you actually think about how much of a percentage move that is? Let me put it in perspective for you. If you're expecting this stock to move to $72, you're expecting a 40% move in 1 month. Does Uber move 40% on any given period, even during earnings? It doesn't. So why would you pick that kind of a contract? Why don't you go further to the money where you have a higher chance of hitting it and making profit? If you're trying to play the profit on the way up, it's not going to work. Remember that delta is very low here. It's only when delta approaches 72 where it will max out. And so you're not really putting any risk to reward on your trade at all. You're just taking a cheap contract because you can't afford it. And I know exactly what you're trying to do because I've made these mistakes before myself. So stop trying to buy cheap contracts. This is my main focus. Stop doing it. It's not going to help you, okay? Cheap contracts are not the way to go with options. You need to pay for time value. If you can't buy expensive contracts, then don't trade those at all. Just don't trade. Save up money till you can buy quality contracts. Please listen to me about this. It's super important because I always see the same people asking about these further expiries and with these far strikes. And I'm telling you guys right now, you're just going to stress yourself out and waste money on these contracts. You take such a far out option with such a far out strike, by the time you get to the next 2 weeks, this contract's dead because you have no likelihood of hitting it. You end up putting yourself in a worse position than you were and you don't gain anything out of it, okay? So choosing the further strike might seem a cheap option to you. It's like, oh, I'm going to try and hit something that doesn't hit. But what's the point of taking that when you can take something like a $60 call and play the run up to 56 or 55 or something like that and make some profits? This is equally out the money, but you actually have a basis for taking this one because it's a resistance. I hope you understand what I'm saying, man. So, yeah. Okay. MU, 219, $87 call. Okay, so you're betting on a move to here, but then so here's now you guys are going the other way. See what I mean? It's like, okay, now you got the strike correct, but you're expecting this to happen within the next 2 weeks. Okay, possible, maybe, if MU makes a huge wave up, and that means you're also betting on market all-time high. You do realize if Micron has to go up all the way to 87 as you're projecting, right? Once again, then what does that mean? That means the market has to have a great wave up, a green wave, okay? I'm not saying it won't happen. What I'm saying is, why do you guys always choose the cheaper contracts in an effort to try and hit this in such a short period of time? And if you're taking a swing trade, do you think that Micron is going to move from here to here within 2 weeks and you can bet on that on a 90, like more than a 50% basis? Can you say this with more than a 50% certainty? No, you can't. And if your certainty is less than 50%, you shouldn't be betting on it, okay? If the risk to reward ratio doesn't make sense with more than a 50% basis, you should not be taking the trade, all right? You should not be taking the trade. You need to pay for additional time value of money, time value of money, time value of money. Pay money to make money. If you are scared money, you don't make money, all right? I'm just saying. All right, please, man, listen. Like, seriously, guys. It's like super important. A lot of people are trying to choose these short expiries and bet on a very short period of time. Yeah, that's a nice 1,000% bagger. Woohoo, you're gonna make a lot of money. But how consistently can you do this? How consistently can you do this? That's my question to you. Okay, maybe this time you take this contract and it hits. Yeah, congratulations, you did it once. But if you're planning to do this every single time, chances are you ain't gonna do it. Okay, chances are you won't. You won't be that consistent. So remember, be consistent. That's what drives this profession. Consistency, not one-time baggers. All right. February 19th, DocuSign 220. Please tell me that the strike is remotely close. Oh, 220 puts, you're saying. Oh, okay. Now you want to bet to the downside. That's not a bad idea, but then I would wait for a confirmation of a rejection of this level here at 238, 237. There's a dual zone right here that DocuSign's going to come up to. Since it's making this move up, it's already coming up there, right? You can see pre-market's at 234. It's going to come up here, more than likely, right? If it gets rejected, yeah, then play that to the downside. But then I still think your strike is a bit far. 220 is like down here. I mean, okay, it's not like super far. And in all honesty, it's not a bad play because this is the demand zone here where it will come back to bounce. But I feel like, you know, if you're playing a swing trade like this, and once again, you're taking February 19th, you're giving yourself very little time to achieve this, okay? I feel like you should take a further strike. Sorry, a further expiry. You're giving yourself too little time to achieve this. And chances are that you will more than likely end up losing money if it doesn't achieve that. Yeah, I see the death cross, man. I see it. Believe me, I see it. Yes, it can move further down, but you're giving yourself too little time to get here. What if the market moves up in the interim back up to above the moving averages and then decides to come down, right? What happens then? Why don't you buy yourself the additional time value so you can be secured on that trade? That's my question. You're pricing in yourself too close. That's what I'm saying, okay? Too close. I've been scalping Fubo since 2 weeks ago. They're weekly now, so I have to exit 48 calls, da-da-da. You have to take profits on that one, Cameron. The Fubo contracts have insane IVs. They have insane IVs. I would take profits on them. Take in the money, bull call spread instead on MU. That is such a very good idea, Juliana. You learned exactly what you applied in the intermediate course, and I'm so proud of you. That is such a great idea. Taking it in the money, bull call spread is exactly the right way to play the MU play. Because you can buy the contract for cheaper, and if you don't know what that is, Jason, you should probably, you know, read up about it. You can take a bull call spread on Micron, and you can get a cheaper play to the upside because you're betting. You want to bet on $72. Oops. You want to bet on $72. Sorry, what was it? 80. Wait, you were trying to bet on what? Something like. Wait, what was the ticker? I think it was MU, right? Wasn't it MU? I feel like you said MU. Wait. Let me see. Oh, Uber. It was Uber. Even on Uber, let's say you can't afford it, right? You can't afford this. You're trying to buy the out the money contract because you can't afford it. You don't have enough money. Why don't you do a bull call spread? You know, buy the in the money, sell the out the money. Buy the in the money, sell the out the money, and fix up a spread here. Fix it up between $53 and $59, or you know where it is right now, 53 or 51, all the way to 60, where your target is. This will give you funding to buy this call cheaper. Okay, you can do that. Baidu, Anissa, I'm looking at Baidu as a play on the long term as well. But I'm waiting for a wave down to complete. This wave is not over yet, so I'm waiting for this to complete. I think bounce on the 200 EMA down here at the 220 level would be a nice time to add Baidu, which would be also in line with our demand zone right here. Can you see that? This right here. That's where I want to start initiating a buy on Baidu. I like that though. CRM 250 calls for March 19. Okay, well, market's about to start here, guys. I'm sorry, I wish I could answer all your questions. T, do you ever trade Spotify? I don't. And the market just opened. So I'm actually going to jump on the call with the live trading team here. Remember, guys, if you want to be a part of the Discord where we're going to just hop onto the live trading session right now, let me know, okay? I'm going to start a Zoom session, and I will be doing that shortly. So, all right. I'm gonna record this. Cool. So I'll be training with the team right now. You guys have a great day. Thank you for tuning into the live stream. I appreciate you guys. Once again, thank you for all the likes. Truly do appreciate it. Have a good day, and I'll catch up with you all soon. If you're interested in the live trading session, sign up for the Discord community. Promise you the value is worth it. We'll see you on Wednesday for Fundamental Wednesday on Nike. where we'll value the business. So take care, and we'll see you then. Bye, guys. Peace out. Love you all.